Hello everyone. Welcome back to Stock Market Meridian. Today is Friday, June 19, 2026, and you're watching today's pre-market report. We have an absolute packed episode today with major structural shifts from US Federal Reserve's a massive $3 billion banking deal in India and a crucial geopolitical updates that you cannot afford to miss before opening bell. Let's begin with global markets. Starting with the US markets, yesterday, all major indices opened with a gap up and closed in positive territory. In European markets, only the FTSE 100 index closed in red, while all other major indices ended in green. Now coming to Asian markets, Japan markets closed strongly positive with gains above 1.6%, and today it opened again with a gap up. China indices closed slightly positive with gain about 0.2%. South Korea markets were also very strong yesterday, closing higher by 2.2%. And today again they opened with huge gap up and touches a fresh all-time high. We will discuss about Gift Nifty at the end of this video. Now moving to the commodities section, US WTI crude oil is trading nearly $75 per barrel and Brent crude oil is also trading at around $78 per barrel. In Indian commodities, crude oil futures closed slightly positive yesterday, while natural gas futures gained nearly 2%. In the metals segment, Indian gold futures closed sharply lower by 3%, with prices falling below 1,50,000. Silver futures are also witnessed heavy selling and closed down by 5.6%. Now let's look at ADR's data. Reliance, Wipro, and Infosys ADRs are closed in negative territory. Meanwhile, HDFC Bank, Dr. Reddy's Labs, and ICICI Bank ADRs closed positive side. This clearly indicates negative sentiment in the IT sector and positive sentiment in the banking sector. The main reason behind weakness in IT sector is yesterday Accenture's downgrade in annual revenue growth forecast for financial year 2026. This has triggered concern that global companies are reducing their technology spending. Even though IT companies are investing heavily in artificial intelligence, businesses are still cautious about spending aggressively on new technology projects. This slowdown in global tech spending is creating pressure on Indian IT stocks. Now let's see FIS and DIS data. Yesterday, FIS were net sellers of 1,025 crores. DIS were net buyers of 3,516 crores. Particularly, FIS remains strongly bearish in index options and cash markets, while neutral in index futures and stock futures. BIs are medium bullish in index futures and stocks, and retail investors are showing strong bullish sentiment in stock futures and index futures. Yesterday, the biggest event was the US Fed FOMC press conference. Fed Chairman Kevin Warsh made several major announcements. First, the Federal Reserve anonymously voted 12 to keep interest rate unchanged in the range of 3.5% to 3.75%, and no one has voted to raise or decrease the interest rates. However, some officials hinting at the possibility of a rate hike later this year. Second, Chairman Kevin Warsh announced major structural changes in Federal Reserve. He introduced 5 new task forces focused on communications, Fed balance sheet, data sources, productivity and jobs, and last, inflation framework. Third, the Fed is now strongly shifting its focus towards fighting inflation. The new priority is clear: price stability. Finally, Chairman Walsh chose to abstain from the traditional dot plot forecast. This signals a major shift in how the Fed communicates future rate expectations. Overall, there was no highly impactful surprises from the Fed conference, and that is one of the main reasons US markets reacted positively yesterday. And other key economic updates are US initial jobless claims came slightly weak compared to previous data, but remained largely neutral for markets. And US Philadelphia Fed Manufacturing Index came in strongly positive. UK and Switzerland, both central banks kept interest rates unchanged. Today, most global markets will remain closed due to local government holidays. And tomorrow, there is no economic updates because of weekend. Before moving to further, a quick reminder. I upload pre-market videos every single morning before market opens and post-market videos right after the market closes in the evening. So if you find these videos useful, please subscribe the channel and hit the bell icon. Now let's move to geopolitical updates. Today, biggest development is around US-Iran relations. Markets are expecting the US and Iran to sign a 60 days MOU. If this agreement happens, markets may react positively as tensions could reduce. But if expectations fails, markets could see heavy volatility. Because of this uncertainty, avoid carrying large overnight positions today. Another important update is next week, the US trade delegation is visiting India for important trade discussion. This will also closely tracked by markets. Now let's see the top stocks in news today. Amber Group has signed a manufacturing collaboration agreement with Oppo Mobiles India. Under this agreement, Amber Group will manufacture mobile phones for three major smartphone brands in India: Oppo, OnePlus, and Realme. The partnership brings together the global product expertise of these phone brands with Amber Group's local manufacturing scale and supply chain strengthens. For Amber Group, this marks a massive step forward in expanding its B2B electronics manufacturing business and unlocking long-term growth. This update may be impact of the stock price today. Next, Central Bank of India has received a key credit rating announcement. CARE Rating Agency has reaffirmed its CARE A1 Plus rating for Bank Certification of Deposit Program. The size of certification of deposit program has been doubled to 20,000 crores, up from previous limit of 10,000 crores. A CARE A1 Plus rating is the highest possible rating for short-term instruments, indicating a very strong degree of safety regarding timely payment of financial obligations. CARE pointed out that the rating is backed by strong government ownership, with the Government of India holding an 81.19% stake. It also reflects comfortable capital level, a large pan-India network of over 4,500 branches, and significantly improving asset quality. Next, Brigade Enterprises Company is aggressively pushing back against a recent government decision regarding a massive project in Chennai. The state level Environmental Impact Assessment Authority has cancelled the environmental clearance for Brigade's residential project, Brigade Morgan Heights in Chennai. Brigade Group has strongly objected to this move, calling the cancellation completely incorrect and unfair. Here are quick facts from the company's stance. First, Brigade point out that the project site is on private land and that has been classified as a dry land in government records since 1935. Second, just 3 months ago, the Madras High Court dismisses a public interest lawsuit against the project, noting that the land could not be designated as a wetland. Third, the authority cancelled the clearance without giving the company any prior notice, a personal hearing, or a chance to present their evidence. Because construction is already ongoing and significant investment has been made, Brigade has announced that it is appealing the order and exploring all legal remedies to protect the project. Next, HDFC Bank's board just wrapped up a meeting and announced two key decisions. First, the Reserve Bank of India has officially approved a 3 months extension of Mr. K.K. Mistry to continue serving as the bank's interim part-time chairman. He will hold the position until September 18, 2026, or until a regular chairman is appointed. Second, the bank will hold its annual general meeting on Wednesday, August 5th, 2026, via video call conferencing. In that meeting, if shareholders approve the proposed 13 rupees per share dividend, the actual dividend payment will be start going out on after August 6, 2026. Recently, sources has said that ex-RBI chairman is going to considering for HDFC Bank's chairman post. About that news related, no clarification has came out from HDFC Bank at present. Next, ICICI Prudential Life Insurance just issued an important market clarification regarding rumors about its promoter stake. Mainstream media published articles yesterday reporting that ICICI Prudential shares gained over 3% because a promoter is looking to retain a 21.9% stake. On that reports, ICICI Prudential stated they are completely unaware of any such development regarding stake retention. The promoter, Prudential Corporation Holding Limited, responded to the rumors by telling readers to ignore the gossip and refer strictly to their official regulatory disclosures made back in May 2026. So the company says there is no truth to the news, driving the stock price up yesterday. Next, RBL Bank has announced Dubai-based banking group Emirates NBD has successfully completed a $3 billion investment in RBL Bank. Following the completion of the deal, Emirates NBD now officially own a commanding 60% stake in RBL Bank. CEO Shaini Nelson noted that this is one of the Emirates NBD biggest international investment, making it one of the single largest foreign direct investments in India entire financial services history. Presiding over the event, Maharashtra Chief Minister Devendra Fadnavis stated that this transaction sets a powerful example. He mentioned it clears the way for deeper ties between international and local banks, pointing to a massive $100 billion project pipeline ahead. Overall, this deal is a huge vote of confidence from global investors in India's long-term economic growth. Next, Lemon Tree Hotels has signed two new licensing agreements for premium resorts in Maharashtra. The new properties will be Lemon Tree Resort in Tadgaon and Lemon Tree Resort in Igatpuri locations. This deal adds a total of 200 rooms to the company's pipeline, with 110 rooms in Tadgaon and 90 rooms in Igatpuri. This brings Lemon Tree's total network in Maharashtra to 32 properties, consisting of 15 operational hotels and 17 currently in the pipeline. Both resorts will be fully managed by Sarnation Hotels, a wholly owned subsidiary of Lemon Tree Hotels. The company is specifically targeting this emerging weekend drive to designations to capture travelers and corporate retreats coming out of major hubs like Mumbai and Pune. Next, the US Federal Trade Commission is requiring Aurobindo Pharma to divest from 4 generic drug products. This is mandatory condition they must fulfill to complete the $250 million acquisition of Lannett Company. The FTC explained that letting the deal go through, a planned would merger of a very limited number of competitors making these specific generic drugs, hurting market competition. Aurobindo Pharma will be selling these drugs asset to Fosun Pharmaceuticals. The 4 specific products being sold off including an organ transplant rejection drug, a cholesterol management drug, a treatment for dry mouth in radiation patients, and a stomach acid reduction drug. These are high revenue generation drugs and less competitors. Overall, by forcing Aurobindo to sell these assets, the regulator is trying to keep generic drug prices in check for patients who rely on them. Now let's talk about the Gift Nifty. Yesterday, Gift Nifty closed at 24,192 level with 0.38% gains and today opened at 24,027 level. So those are the important updates you need to know before market opens. We'll meet you right here in today's post-market video. Until then, signing off. Bye bye. Jai Hind.